Well, stocks are pulling back today after the Dow Jones hit a record high on Wednesday, which many believe signals a rotation from the AI trade into other less speculative names. Let's bring in Adam Johnson, founder and author of Bullseye Brief. Adam, thanks for joining us.
Oh, you bet, Roger. Good to be with you.
All right. Does that feel like it's the case? People are looking for a little safety, I guess, right now. Can we use that term?
Yeah, I think at this point they're reaching for anything they can find that seems safe. And, it's interesting, Roger. You may recall about 6 months ago when China announced that it created DeepSeek, an alternative to ChatGPT, and everyone said, oh my gosh, the whole AI trade is over. It's done. The Chinese are going to crush us. And after a couple weeks of selling, all of a sudden everybody realized, nope, that's not the case. And those stocks went on to new highs. And I think that what we're seeing today and what we've been seeing for the past several days is really just sort of chapter 2 of that story where everyone is saying, gosh, AI really costs a lot. And I mean, are we sure we're actually going to get a benefit from it? And by the way, are these stocks in a bubble? Well, AI does cost a lot, but it's worth it. Yes, we are going to get huge benefits from it in terms of productivity. And no, these stocks are not in a bubble. They're getting hit right now because some of the names are expensive, but are they all expensive? Are they all in a bubble? No, absolutely not. Celestica is actually quite cheap. NVIDIA, I would argue, now under 30 times earnings with 75% growth. That's cheap. Palantir, I wouldn't touch it. Palantir is still way too expensive at 300 times sales, 100 times earnings. So no, I wouldn't touch that. But this is just one of those moments where everyone is selling first, and when it exhausts itself, people will come back in and buy them.
So you do feel that they're going to come back? This isn't a little bit of a hedging, maybe kind of trying to spread out their assets?
Well, there's also an assumption that smart people get together and say, hey, what do you think of this one? I don't think that's how it's working. I think this is an algorithmically driven sell-off. And I say that, Roger, because if I look over on my screen, I've got about 4 names, all AI names, that are trading, that are all down by almost the exact same amount. And you've been doing this long enough to know that's not the way it works. Unless computers are actually driving the selling, because they sell the basket of AI stocks in equal proportion. If it were individual selling, we'd say, oh yeah, I'm going to sell some Celestica, CleanSpark, maybe I'll sell that too. But when it's a computer, it's selling a specific basket of stocks in a very specific amount that reflects the market cap of those names. And that's why they're all trading lockstep with one another. This is a computer-driven sell-off. It's not people dumping stocks.
Is there a way to take advantage of that?
Yeah, hopefully you have some cash and you can do some buying. Admittedly.
But if you know it's going to be a group sell-off and it's AI possibly driving AI, it's kind of ironic. How do you work with that?
Yeah, well, it argues for always having some cash on the side. But, truth be told, I've been deploying my cash over the past week. I guess I was a couple of days too early. I've gotten some wonderful bargains. They're even more wonderful today. But I am a long-term investor. I mean, I typically have a holding period of more than 2 years. So when I see movements like this, it doesn't scare me. I don't think things are over. It's just the ebb and the flow. And some clients had emailed me earlier and they said, when do you think this will end? And I wasn't being cute, but my response is very simple. I said, the selling will end when the selling exhausts itself, as selling always does. Buying exhausts itself too, by the way, on the upside. But when the selling exhausts itself, you get the names down 25, 30%, all of a sudden they stop going down because all the sellers have sold, or the computers, I should say, are done selling. They've determined in advance how far they can take it. And it seems like about 30% is typically the number. And then they stop, and suddenly 2 days later, everyone wants to own them again. We've seen that several times. I mentioned the China DeepSeek sell-off that happened 6 months ago, but even NVIDIA, every 6 to 7 months, NVIDIA goes down 25 or 30%, and everyone always asks whether this is it and it's over, and no, it never is. So this is just ebb and flow.
All right, let's talk a little bit more macro. We might get some numbers. We might not get some numbers. Do we need the numbers? One of the numbers I heard bandied about for inflation, 3% coming back again, which is pretty much where it's been running. Any concerns with that?
I'd rather have information than not have information. And yet I don't think not getting the data out of the government because it's been shut down, I don't think that really matters. we get the ADP data for jobs. ADP, automatic data processing, handles about 1/5 of the payrolls here in this country. So they've been issuing 50,000 more checks per month, every month for the past 6 months. So private data suggests to me that the labor market is still growing. So, check that off as something we don't need to worry about. In terms of inflation, I think just intuitively, we can all sense that CPI, consumer prices, probably running about 3%, which is a little hot, but that's where it's been. Nothing's really changed in the past several months. CPI has been about 3% for the past several months. And I can't point to anything palpable that feels more expensive. So even though we probably won't get the October data, they're just never going to go back and try to, calculate it retroactively. They'll look forward now that the government's open. And I think that'll be good enough. Some of the companies are going to take a hit. I mean, Delta Airlines is an example, just because there have been fewer flights. When Delta reports its fourth quarter earnings, they may be a tad lighter than we expected because 6% of their flights were canceled for about a week. But again, we all know that. That's not a surprise. So I think we're all just going to move forward at this point.
And going back to the government data, with this shutdown going as long as it did and relying on private data, will companies start to rely on private data even more and not need the government as much?
Well, I'm one who believes that smaller government is better government. So I'd rather not rely on the government for anything. So I think we've all gotten pretty creative. AI, we keep talking about AI, is able to interpolate a lot of this stuff that used to be done by hand. I mean, there are still people at the Labor Department that literally get on the phone and make thousands of phone calls around the country, hoping someone will pick up. And based upon those interviews, that's in part how they calculate the labor data. I mean, that's kind of old fashioned, right? That's like, sending a trade con firm with a telex, or, fax me your shopping list, right? I mean, we've kind of moved beyond some of this stuff. So, yeah, I kind of treat anything out of Washington these days with a grain of salt.
All right, we'll leave it on that. Adam, thanks very much for joining us.
Thank you, Roger.
Adam Johnson, founder and author of Bullseye Brief.